Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, April the 19th, the year 2018. Let's talk trading. Winners win, losers lose, part 4. This will probably be the end of this series because tomorrow's Friday weekly wrap up. What is a winner? What is a loser? What do they do differently? That's really the distinctions they make. Well, I'm pretty sure you've heard of the 80-20 rule. And if you apply it to trading, what that's going to say is 20% of your trades are going to produce 80% of your profit. And probably there's 20% of your trades going to produce 80% of your losses. So winners have figured out to eliminate that 20% of trades that produces 80% of the losses. It's just that simple. And then they do it again. Then they do it again. So pretty soon, that 20% of the trades that produces 80% of the losses really aren't that great in comparison to the 20% of the trades that produce 80% of the profits. So what you might want to do is take a hard look at your trades and look at those ones that produce that 80% of your losses. You see, if you apply money management, then those trades that produce losses are all going to produce the same size loss, which is your risk, which is the amount of money you're willing to lose per trade. Maybe I should put that right here, per trade. It might make it a little bit clearer now that I think about it. We can go in here and do that. Oops. Oh, maybe we can't. Maybe that's why I didn't do it. There's only so much space there. Maybe I can do it this way. There we go. So hopefully you saw how I did that. So once again, risk is how much you're willing to lose per trade. Let's see what's going on during the week here. And if you're just tuning in since Sunday, you can see all the gaps have filled. If you've been tuned in all week, you can remember that yesterday this was red. And it actually came into the weekly wick zone. Then it came back up. As you can see now, it's going into the upper weekly wick zone. Down here was the lower. Doesn't really like, price just doesn't like staying in the wick zone for long. It could wind up in here today or it could wind up down here. We will just have to wait and see. And looking at the daily, you can see we had a break of yesterday's high, good for about 13 pips. I hope you took that trade if it came up, or when it came up for you. Maybe you don't trade the dollar yen, but anytime you see this trade, you take it, and that'll be in the 80% of your profit category. And today, not much range. A couple of New Zealand pairs had nice range, but not the New Zealand dollar. Dollar pairs just across the board, very low ranges today. I think what I'm going to have to do is run frequency distributions on the ranges, and let's just see what's going on, because it seems like price just isn't moving like it used to, at least not on the daily basis. And here we go, looking at the buy zone. And it shouldn't surprise you that here in the early session, New Zealand, Australian, and Asian session, that we had a nice break to the upside. London, once again, we had movement. There's the weekly open. You can see we're just playing with the weekly open right now. Price is moving up. So hairy hindsight a few minutes ago, had you jumped in right here, you'd be up a pip or so. Rat zone. There's just no movement. Oh yeah, we were looking at Euro CAD this week for some reason, and you can see here we have a little rat zone. Green rats got some cheese, a couple of pips at the moment. Put this back where it was. And looking at the pivot, we had the open, price came down, hit the pivot, and reversed right out of that central pivot area. You see here it exited to the bottom, but then it came back and reversed out. Oh yes, I made a modification to the spread dots. Usually it just had one line telling what was happening. And then I thought it might be a good idea. Let me fix something here so we can see it a little bit better. I'll show you how to do this. See, I turned the grid off. We can turn it to yellow just for a second. I can move the chart out, so now we can read that. Come back here to properties, grid, none. And now we can see it. So I figured, it might be interesting to kind of see the history. So what I did was I added a few new inputs. And I changed that to show the peak valley lines. Okay. And I set it to false. And when you load the new version, everything should be the same. And then the number of history is right here. Actually, I should probably make that default 1 so it would just show the top, but you might want to see more so you can see the overall progression. So you can see here there's been more selling than buying, and you can up this number. Now, if you up the number, all this is going to go away because the indicator is going to reset itself. It goes through the init routine. So just remember that. If you change anything in the inputs, this is all going to go away and start fresh again. And so looking at it, you can see there's been more selling than buying. So this just kind of helps you decide which direction you want to trade. And I found it to be a great timing tool. It really, I think it's a really great timing tool. So you can see here, I've got it on an H1 chart, but it doesn't really matter. You can put it on an M1 chart. You can put it on a monthly chart, really, but monthly really wouldn't help you that much. And actually, I usually have it on a minute chart. But this is actually the screen I'm using now, or one of them, to enter the trade. So you can see here we had a lot of selling. So probably all sold out. So now the buyers are taking over. So you can see here price crossed above, but on an hour chart, you really need to spread it out because you can see where the hour is. So you can see here the buyers are pushing price up. It got above this lowest peak. Now, technically, if you use the tick chart indicator, then it would have a true, you could see where the valley and the peak, it would be a line chart just like that. But when you're just trading, all you want to know is the current valley, the current peak. So you can see here, this price is moving up, the current peak is moving up. So if the ask drops below the peak, that's when the selling starts. And the other thing about having this is, see, this is the ticks. So you can see we're having 230 plus ticks have all been buying. In other words, the bid price has been above the valley, and the ask price has not been below the peak. And when you look at it, it just really makes so, to me at least, it makes so much common sense that it just really has helped refine the timing, especially trading reversals, because you don't want to get suckered in to buying and then the price keeps dropping. So if you wait for there to be real buying, then usually you don't get hammered. And right now you see how price dropped below and the selling starts again. And I will be sending out batch 3 sometime soon for the 2018 donationals, and it will have this new version of TRO 2018 spread dots. So where were we? We were looking at price action, so hopefully now you understand this. And here we go again, looking at these horizontal lines. And I think we just saw right here, price came back down to near the H1 open and turned and went back up. So right there during this video, no hindsight, you'd be up a couple of pips right now. And you can see that price is escaping that wick zone again. But you also see it's making lower highs. And the highest open, lowest open only had a couple of opportunities. Once again, there's the weekly open, and price is just oscillating around that weekly open. And here is the tick chart. And right here you can see bid right here came above 107.336, which was the lowest ask at the time. And it did that. And so you can see here we just had another switch. Price came above here, 39. And we're still buying. And you can see here every tick. Is it higher? Did it stay the same? Or did it go lower?